Morning traders, Paul here with GammaEdge. Today is Tuesday the 19th of July. Let's get started. So read the fine print, pause your player, read to the end. It's important to you, it's important to us. If you agree, hit the play button. The market model is still long. We had two signals that developed, one on Thursday, one on Friday. This is the cumulative tick model that we use. This is on the ARCX, but you can see yesterday we actually had what we anticipated. We said this quick run up that we had on Friday could lend itself to a pullback and consolidation. The key takeaway here is that we're still quite a distance above what we call the ribbon or the historical moving averages. Why that's important is that it just shows us a history of where we've been. And there is some consolidation that we could do today. As long as we stay above this, we'll keep the keep the bull signal. If we do drop below this, things get a little more dicey and we'll have to be careful. Now, that being said, if you're a short-term trader, one of our traders, JB, likes to take his profit here. He likes to get in down in this area, and so just be aware that this first crossing of the shortest moving average is something that he uses, and this is called a railroad track pattern. It's tested very, very well. It's put into practice very, very well if you're a short-term trader. Longer term, you'll have to gauge that one yourself. All that being said, we are seeing a divergence in the S&P 500 cumulative tick. This is a different symbol. I don't talk about this a lot. This is the tick SPC, S&P Composite. First of all of the historical moving averages or the ribbon is down. All the slopes are down. That is a long-term down signal. When we see that, it's going to be very, very difficult. In addition, you can see yesterday the cumulative tick actually in this S&P 500 sold off. Now compare that to what we had here and then the reversal in the ARCX. And this just shows that the S&P 500 stocks were not participating. This is restricted to those 500 stocks. And since they were not participating, this is a strong divergence. And it really did, the early morning did portend well. We did call this out early in the morning around 10 o'clock that we did have the divergence, and people should pay attention. The NAS actually is carrying part of the weight. Technology carried the day. These are the NAS 100 stocks, and you can see that they moved up pretty aggressively, and then they failed just like the ARCX did. And when we see something like this, again, here's JB's little profit taking. We had a good continuation. We're really very, very close now to failing overall in the technology sector in the NAS 100. So I want to pay attention to this. I think we're still on a bull signal, as you can see here, but a failure of the cumulative tick below the ribbon would tell us to start looking at a pop out the bottom and potentially going short. When we take a look at the index conditions, in general, we saw put protection going in, negative gamma going in across the board on the SPX, the SPY, the Qs, and the IWM. Not seeing a lot of reaction on the call side, either one direction or the other. The Qs probably had the majority of it, as well as the SPY. Taking a look at volatility, a mixed picture again. We saw some downside puts going in. We also saw some upside calls going in. And one thing to pay attention to, which is a little bit different, I would urge everyone to go back to yesterday's presentation where we saw 10, 11, or 9, 10, and 11, September, October, November, on the call side, a fairly significant value. Now we're seeing some short-term August go in, and you can look at the relative magnitudes here. When we see these calls go in like this with a shorter term date, it is most likely in anticipation, of not advancing in the markets and being able to take advantage of increased volatility. Down here you can see the distribution of the strikes. Perhaps some of these were sold short to pay for some longer call structure that's up here. You can see that we had this major opening position here, change here up at the 80 strike. Not that people are thinking we're going to get up to 80, but any move up here funded with sales from down here is a potential good play, and I would urge everyone to take a look at that. Taking a look at the true deltas, I talked about this yesterday. We introduced these charts over the weekend, created quite a discussion in the Discord. I would urge everyone to come and take a look at it. Lot to discuss down here. I won't get into the details right now. Happy to do it in the Discord, but just take a look here that the overall trend is down, and pay specific attention here to the AM settled. We think this is indicative of where we're going and where institutions think we're going. The SPX structure into today, note we are sitting right in the zeros. We think that's important. You can see that we stalled for a number of reasons that you'll see here shortly, up as we got into that 3900, 3905, 3910 area. Just be aware we're in this range. Pop out of the bottom here below 3790. Opens the door to actually heading all the way on down to 3700. There's not a lot of support down in this area, so just pay attention to that. Taking a look at the key levels here for today, you can see we've got on the PM settle, we've got some pretty small numbers. We're getting ready to flip over here, but we've got huge dominant levels over here. The 4,000 strike remains dominant for what we're looking at. It's going to be very, very difficult to get above that. The expected move for today, based on implied volatility, is lower than what we've seen in the last couple of weeks, but it's still elevated, so just be aware of that. Taking a look at the SPX, this is the PM settled, fairly large transition area here. The key takeaway for everyone is that we've got a lot negative deltas on the downside. We're getting some transitions to the upside. You can see the presence of that JPM strike here at 4005. You can see that we have a good call structure up here at 4000, and this large area here shows that we could have a stalling point with a large delta notional sitting right in here. We closed here yesterday. We could play around in this zone. I do anticipate, especially with positive GEX here, to potentially stall in this area, so we'll have to watch that closely today. The 0 DTE, very clean, very small transitional area here. Some notes here, pause your player, go ahead and read those. I think delta notionals, again, negative going up here. Look at the gamma structure. 3900 is going to be an area where above that the contribution from the 0 DTE is minimal. You can see, though, that to the downside, moneyness flips here a significant amount at 3840, and all the way on down, we gain some speed. We think that's important, so take a close look at that. Make sure you understand this chart and in the notes that are here. On the combo complex, still quite an overhead. We've actually had a net increase in the delta notionals here. That's going to be very, very difficult to push anywhere north of 4,000. Frankly, even pushing out of the transition area shown by the blue box and getting above 3,900 for the reasons I just said in the other screens is going to be very, very difficult, especially with these transitions that are going on and being in this transition zone. I will note that the delta notionals are starting to extend down. That is not good. That is not good for the bulls. It's great for the bears. And so if we get any type of rip up and we don't start clearing these and turning them positive, it's going to be extremely hard to move up into this area and hold the area, just because the headwinds are going to be fairly strong. Taking a look at the SPX structure, 4200's become the dominant. We're also seeing this growth at 4300, which is good for the bulls, no question about it. In this area here, you can see we closed at 3830. We're still at the low side of the transition, as indicated in where the transition zone is here. When we have this, it's going to be very difficult to advance and hold. We need to see calls coming in, puts being closed, and right now we're not seeing that. So this is going to be a headwind resistance. In order to advance, we need to start clearing this, and we need the spot price to start advancing up into the positive gamma structure, and we're just not seeing it. JPM, until we can neutralize this with a call structure, is going to be very, very hard to get over. We did see some growth here at 36, 37, 38, so that's good, that's constructive. Part of it's because we did move down, but the other part of it is that we're starting to see some puts being added down here, as indicated earlier in the wing charts, and that's a good thing to see. Short-term downside protection, a well-hedged market does not collapse. So takeaways for today: market model is short-term bullish. That's those signals, those green signals that I showed you, but we are subject to failure. So we got to watch for this consolidation and see just how deep the consolidation goes. We are longer term bearish. We do think you can play the upside opportunistically at the correct entry points, right? That's a key thing. The wing charts are showing a significant addition of net negative gamma. That's the downside put protection. That's good. We like to see downside put protection because of the hedging. And that if we do dip down into there, that allows us to monetize those and push us back up into and keep us in a range. The zeros of the complex are noisy and choppy. I didn't really go into this in great detail, but just be aware the history is quite bearish and is trending downward, and we want to pay attention to that. If we can get above the 3900, 3910 level for today, that'll be great. I do anticipate some stalling or headwinds in that area. We'll just have to see how things play out. If we continue to stall in that area, I'm going to be a taker on the downside. We'll just see where things play out. So that's it for today. If you like today's content, come join us at GammaEdge.us. That'll take you to a sign-up page over on the pricing tab. It'll get you into the Discord. 14-day free trial in the Discord. All the tools turned on. Great group of traders. Really knocking the skin off the ball here. Doing different types of trades. We have everybody from scalpers and zero DTEs out to swing traders. And position traders. No position traders right now because the market's not supportive of that, but all styles, both long and short, are represented by the members, and it's actually a fun place to be. Follow us on Twitter here at GammaEdges with an S, and then here on YouTube. If you like today's content, I would ask you to smash that like button and follow us so that you can get notified next time we post content. So with that, I bid you farewell. Have a great Tuesday and hope to see you in the Discord. Take care.